now.
No,
All
it's
right, now
true.
we're
He really
live.
did click the button this time.
Okay, all right,
I
fine.
really clicked the button. We're live now. All right, everybody, we're live. It's the Daily 10. It's the one and only notorious, glorious V, the Guerrilla Economist. And we have Dex, the algo capitalist, and my main man, Frank, who is making sure that, I don't know what he's making sure of, but he's just here. But
He's being frank, man.
he's just being Frank. Frank is being quite frank. Lots of things to talk about, but most importantly, Dex, it's FOMC Day, baby. FOMC Day.
Yep,
Where do
ahead
we
of the
begin
big
with this, bro?
G20. The big G20 coming right behind it, man. It's a big
Uh-huh.
deal.
A lot of
Basic,
monetary news.
basically, everyone's waiting to see what the Fed is going to do today. Like I said the other day, you got to be prepared for anything. The Fed can do whatever the Fed wants to do, even if it doesn't make sense. All right, they can raise those rates a quarter basis points, half a point, full basis point. They have been known to shock and awe before. Right now, people are hoping that they get an adrenaline shot in the arm, have the Fed lower the rates by a quarter point, and then that would really fuel the next leg up in this bull run that we're having in the equity market. Raising the rates should and might have a negative effect on the market. Let me explain what I mean by that. Some people say, well, how can you say that when the Fed funds are suggesting that, the Fed's going to raise rates quarter basis point, whatever? The reason why is because as the normal FOMC cycle goes, and yes, there is an FOMC cycle, the FOMC cycle is the markets normally rally into the announcement like we have done. And then after that, the markets collapse. They're saying that not so fast as far as the Fed doing or not doing something today, even though it's very important. But what's more important is what's going to come out of the G20. Are we going to have a trade deal done with China? The word on the street is no. Don't expect anything to come out of the G20 meeting as far as the trade wars and tariffs go with China. They're not even expecting that, and they think it's actually silly to expect it. So here's my take. I believe the markets are about to roll over. I think we just, it's buy the rumor, sell the fact. So we're going to end up selling this news today when it comes out, provided it's not a shock. The Fed can do whatever it wants. I can't stress that enough. I've seen it before in my lifetime where the Fed has shocked and awed the markets by doing something totally unexpected. So be prepared. If you see the markets go berserk today, it's because the Fed did something that shocked everybody. So right now, the money is the good money, the big money, smart money is betting on a sell the rumor. There are some very big funds on Wall Street right now that are setting majority in cash. I
Mm-hmm.
kid you not. They've taken profits on this run and they're sitting back waiting to see where everything is going to fall. And then they'll make their decisions from there. But there are people on the smart money side that are not buying these prices here. They're not buying this equity one right here. They're looking to fade this run, and I'm one of them. I think the market is going to pull back. Reason I think so also is because we have some gaps that need to be dealt with. All right, we gapped up on the way up here. So until those gaps are taken care of, you can't really bank on this market. The bull is not a real bull if it can't withstand the pullback test. Once it sustains the pullback test and bounces, we know it's real and we know the market's ready to rock. If it does not, and I can't say this without enough stress, if this market runs today for whatever purpose, the market's in big trouble because that means the higher it goes, the more devastating the pullback's going to be
Hmm.
to fill in those gaps. You rather fall from a 3 foot ladder than to fall from a 20-foot ladder. Your chances of survival go way down when you fall from a 20-foot ladder. And for those who don't know, It only takes a 10-foot drop to kill a person. So I'll leave you with that on that note.
I fell from 10 feet.
On his head when he was a baby. So Dex,
that explains a lot. But go ahead.
Yep.
When what would you say in terms of, I'm thinking about our pulse wave traders right now in the room. Are you waiting and seeing before you place, related orders, or are you do you have orders at both sides of the market, which obviously could be really dangerous because you can get whipsawed? But how are you going to play it?
Oh, I'm all in, man. I sold everything I own.
You say that, and some guy in the room
know,
was
right?
Like looking up his DIA and putting it all on it. Or
I
something.
know. Full disclosure, I am flat. I
knew you were going to say that. I was just setting you up.
I took a small short position.
You took a small short, okay.
Yeah, I did two positions, actually, two small ones. I shorted the micro Dow because I wanted to see how these new products are working. And I'm here to report that the micro stock indexes are very, very liquid, and they move precisely just like their other E-mini and big contracts. So they're perfect. I liked it. Got stopped out on the test, which I expected, and it did it. I also took a small position in DXD. I think my timing was just a little bit early, so I did get stopped out of that too for a small loss. So I'm waiting until after the announcement before I do anything else. If I see that the market may be getting ready to make a move within a few minutes of the announcement, I'll still take a look and see what happens 5 minutes before the announcement and 5 minutes after the announcement before I decide to do anything. FOMC rule is in effect. It's not always in effect on FOMC day, but in light of all the stuff that's going on, FOMC rule is in full effect. FOMC rule says that any open positions that you have, you can tighten up your stops, do what you got to do to protect, your profits, but you do not initiate any new positions ahead of the Fed. That is a foolhardy mistake. That is a rookie mistake, and you're asking for trouble.
Yeah.
You're asking to get your face ripped off. So you do not trade ahead of the FOMC.
Having a pro around, because novices think, "Oh, I could get something crazy out of this."
I can't stress it enough. Today could be absolutely devastating because there's so much geopolitical news. We got trade wars. We got pressure on the Fed to take action to keep the market running. We got potential World War III going on with all this foolishness going on in the Middle East with Iran and tankers being bombed up.
Everybody who thinks that was a false flag, raise your hand.
I have both hands raised wide up in the air.
What are you talking about? I saw a video where Iran was planting bombs on the side of a ship. What are you talking about?
I was trying to talk about it being a false flag, and they were looking at me like, nah.
Well, someone has a good question in the room, and I do need to hit this. They said, does what I just say go for the crypto too? I'm glad you mentioned that. Okay. Now, if this was a few years ago, I would say absolutely not. Feel free to do whatever you want. But unfortunately, this is one of the downsides of globalization and centralization, because you have so much international interest as far as institutional money that is poured into these cryptos. You have to treat the cryptos now the same way you treat Forex, futures, and stocks. So the answer is yes. I would not be putting on any new crypto positions ahead of this Fed announcement, because you do not know what's going to happen. And let me explain a little bit of background information, a little top secret stuff for you guys that some people are not privy to. When you have institutional players that have a lot of money on the line, there are certain things that they can do, whether you think it's ethical or legal or not. They can go in and affect other markets to protect their interests or to limit the runoff of their other market exposures. Case in point, it used to be back in the day, it was more so in the 80s, early 90s, but it's still prevalent today, where institutional clients may have very large positions in the tech sector, in the equity market, and the tech sector could be getting spanked So they'll go in and they will short the stuffings out of the NASDAQ futures to, make up for that loss that they're getting, to offset that loss that they're getting on the equity side. And they would do other things, spoofing type things that you can't do now, but they had a way where they could push prices down to get back in and then buy the futures on a low after it spikes down, ride it back up, and then that takes care of the short-term loss they took on the equity side. Why do I bring this up? Because cryptos have the same type of a input output server status where you can do that if you're an institution easy. You can go in there and move Bitcoin easy. That's all you have to do is move Bitcoin. You don't have to touch no other crypto. Just move that Bitcoin and all the other cryptos will follow suit. So they can go in there and they can manipulate that market too by throwing a lot of money at it. They can move that market. Don't think that they can't. They can. The only markets you can't really move like that is Forex and bonds, bond futures. But unfortunately, because of the way that the high frequency robots and stuff work now, it used to be that, even the big institutions really couldn't move those bonds. That's not true anymore. Now you're seeing this weird type of a market environment that we're in where you can go in and if enough money follows suit, you can actually move some Forex and you can move these bonds. These bonds don't be going, moving up a full point, moving down a full point off of nothing. That's some volume coming in there. And that's a lot of volume. So just think about how much money has to be poured in to cause bonds to move a point or two, or to cause, these Forex pairs to move hundreds of pips in a matter of moments. That's a lot of money chasing in that market. So you got to keep that into perspective, folks. That's why you don't play around in times like this. We're in unmarked territory. We've never really been here before, not to this capacity, and we haven't had this much on the line to lose like we have right now. And when I say what do you mean we have a lot on the line to lose? These equity prices, they don't want to see this equity market correct in any capacity.
Yep.
Let me ask you another practical question related to that. So what's so you're saying basically just hold off, wait to see what happens.
Absolutely.
How long does it take to wait and see what happens? Are you talking the rest of the day? Are you talking
No, not at all. The rule
basically
of thumb,
an instant, right? It happens quick.
Not necessarily. I'm about to
tell me.
Explain that. The rule of thumb is basically 30 to 45 minutes after the announcement.
Interesting. Okay.
Reason being is because lately we've been having what is called a delayed reaction.
We got to say that again when we get on our show because they're going to want to know that for sure. Yeah.
Delayed reaction.
We got about 30 seconds left, guys. So
if there's going to be any question and answer or conference after the announcement, then you have to wait upwards of an hour to maybe even an hour and a half, depending on how long they're gonna be talking. If they got to testify before the Senate or whatever on Capitol Hill, then it could take a little bit longer. I don't think that's what's happening today, but I haven't really been paying attention, so I don't know. So once again, when that number comes out, you better not be exposed in that market with new positions yet, because you don't know what's gonna happen, and you don't want to be looking stupid at the end of the day.
Yeah.
So
all right, well, so V's got to go. We're going to continue this. There's a link in the description. We're continuing this on Pulse Wave Trading, our other YouTube channel. Which I'm logged in as a Canadian. I guess I got to turn my VPN on. I thought
Frank really a Canadian. That's
so. This morning,
he's French Canadian, from what I heard.
So I'm none of those things. I'm as American as they come.
Mm-hmm.
So. We'll be over there in like 2 seconds. The link is in the description, and we'll take your questions and talk more about the FOMC. So thank you, V.
You're welcome.
Enjoy whatever it is you're doing now.
Sorry.
I voted for AOC. I voted for AOC.
Oh my god.
I volunteered my guns over to the government.
He did. He only has a
changed my
now.
gender on Facebook to wildly confused.
Wildly confused.
Whoa.
And he's given up his firearms. He only has a musket. He only has a musket that he can load one bearing at a time.
It's a musket, but it has one of those pink hats on it, so that it's less threatening.
Wow.
It's less
They're out of control. The show has already went left.
man.
Turned left.
Jackson, I'm
All
gonna
right,
send you
guys,
a link
thank
in
you
just
all.
a sec, bro. All right, thank you, V. Take care, man.
Take care,
All right,
guys.
peace,
Enjoy.
brother.
Cheers.
Bye.
Bye.